Today, Zoom stock slows way down after reporting 367% growth. You heard me right. We'll tell you why rising revenue sent the shares falling. Plus, with months to go before widespread access to a COVID-19 vaccine, airlines are doing everything they can to convince corporate executives that it's safe to fly during the pandemic. And finally, one global consumer company tests out a big change to the conventional work week. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks kicking off the last month of 2020 in the green. All three major indices finished higher, and the S&P 500 and NASDAQ in particular posted record closes. Investor sentiment rose after a group of lawmakers unveiled a bipartisan $900 billion COVID stimulus plan. Both sides agreed that they'd like to pass more relief before the end of the year when several benefits expire, including things like unemployment insurance extensions and the pause on student loan payments. But Senate Majority Leader Mitch McConnell shot down the plan. So the months-long stalemate continues. One item included in the rejected proposal: billions of dollars for the airlines, which collectively have lost about $20 billion in just 2 quarters. And while there's been lots of news about impressive COVID-19 vaccine efficacy and fast-tracked FDA approval timelines, it will still be months until there is widespread access to a vaccine. But the airlines can't exactly afford to wait. CNBC's LeBeau has the details on the airline strategy to revive its most lucrative line of business: corporate travel.
9 months into this pandemic, the airlines are realizing it will take a long time for corporate travel to come back. They've known this for some time. Corporate travel is down about 85%, and there are 2 reasons for this. First of all, companies are cutting back on corporate travel in part because of the tighter economy. In addition, many salespeople or executives who used to be on the road visiting clients, there are no clients to visit. Everything is being done remotely right now because of COVID-19 concerns. As a result, the airlines are realizing they have to work harder than ever to convince companies that it's safe to send a salesperson out on the road. One way they're doing that is by giving a COVID-19 safety tour. We were with Delta Airlines at Boston Logan Airport as they were taking a corporate travel manager through all the steps from check-in, through security, through boarding the plane, to being on the plane, all of the steps that are taken by the airline to mitigate any possible occurrence of COVID-19. That means touchless entryway as much as possible. That means passengers being spaced apart, whether it's in the seating area at the gate before they board a plane. And they also gave the corporate travel manager a sense of, this is how we clean our planes. This is how we keep our facilities as COVID-19 free as possible. This tour allowed her to see all of the steps that Delta has taken so that she can go back to her risk managers at her company and say, look, I feel comfortable sending our executives back out on the road if there is a particular trip that they want to head out on. All of this is being done not just by Delta, but all the airlines. They realize they have to work with the companies to convince those companies that it's safe to do business travel again. Corporate travel customers are the most lucrative and in many ways the most important customers for airlines for a couple of reasons. One, it's a steady repeat business. These are companies where executives will be out on the road a fairly set number of days every year. You can go to a particular company and you can say, look, we know that you're going to travel X number of days this year, so you can count on that business. In addition, there's a lot of last-minute business and last-minute bookings that go into a corporate travel account. That's lucrative for the airlines. One other thing. The corporate traveler is the customer who will book in first class and business class far more often than the leisure traveler. And those are the seats where the airlines really make their profit. Most believe it's going to take at least 3, maybe 4 years until we see corporate travel come back to where it was a year ago. That's why these tours are so important. Airlines need corporate travel.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
There's one thing I'm hearing uniformly is Congress do not leave town for the holidays, leaving the country and the economy adrift with all of these initial CARES programs running out.
We think it'll give investors more confidence, and therefore, as an exchange, we should play a role here. But I also would say that at the end of the day, it is a matter of companies making their own decisions and explaining and disclosing to investors their decisions, and then letting investors determine what they want to do on the back of those decisions.
We've had our sights set on beauty for some time, and with all the disruption that's happening in the retail industry, we've really taken a step back and asserted a new strategy to be the destination for all things active, casual, wellness, and beauty for the family.
When there's news about vaccine, we obviously see that reflected in the stock. And we are committed to continuing to innovating and providing the best platform for all of our customers and potential prospects out there, from enterprises to consumers. And we really believe that these remote work trends that started pre-pandemic are going to continue in a post-COVID era that we're all hoping for to be here soon.
All right, so we just heard from Zoom CFO Kelly Steckelberg, and I want to keep talking about Zoom for a minute. Shares cratered today, falling double digits. The stock is down after the video conferencing company reported earnings after the closing bell yesterday. But here's the thing. The earnings, well, they were good. Actually, they were great. Zoom brought in more revenue and made a bigger profit than Wall Street was expecting. But investors aren't always just looking for those top and bottom line numbers. They also want growth. Well, Zoom delivered on that front too. In the last quarter, revenue grew 367% year over year, and Zoom expects to keep growing next quarter, but not as much. The company estimates 329% growth, which is of course incredibly impressive, just not as high as 367%. But does that really account for the stock's huge decline today? We asked one Wall Street analyst to explain.
The reason it's down is because of expectations. This one has been a cult stock, a favorite stock to own, whether institutional or retail trader, from the standpoint of it's changed how we interact with each other. You know, the institutional investors were looking more for around 800 million for the top line, just based on kind of some of the inputs that were coming in and what was going on overall in the environment, with kind of stay-at-home orders starting to pick back up towards the end of their quarter that ended in October. So really it was an expectations kind of game with them more than anything else. And really the kind of the underlying part too as well is the fact that a lot of the upside came from what we call their commercial customers, and specifically within their commercial base, the 10 employees or less segment, where that creeped up to about 38% of their total revenue, which is up from 36% in the prior quarter. They're growing the least lucrative type of customers. Their enterprise base, which is defined as more than $100,000 a year contracts, is growing nicely. It's just most of the upside is actually coming from the smaller, less blue chip like customers. It seems like we're poised to be at least out of this sometime next year, and so it does raise the question of, in a post-vaccine world, what does it look like? And I think because you've seen a lot of these enterprises out there, including ones that I also cover, like a VMware who uses Zoom, come out and say, look, we've gotten more productivity from all of our employees working from home. We get better margins overall through cost savings like facility savings. So you end up with this environment that I think organizations are going to want to kind of have some hybrid-like world overall. They've always had very large competitors, and this space is competitive. I mean, at one point, Skype was the darling of the space. At another point, Blue Jeans was the darling of the space. So you do have this need to continue to innovate and have a best-in-class platform.
Okay, time for today's numbers round. Let's kick it off with 10.8. Cyber Monday sales were bigger than ever this year, as shoppers spent a staggering $10.8 billion online yesterday, according to new data from Adobe. That's a 15% jump from 2019 spending levels. Even though sales hit a record high, the final numbers came in below Adobe's estimates, which were closer to $12.7 billion. Holiday shopping started earlier than usual this year as brands rolled out online deals as early as October, which could account for the lower than expected one-day total. Next, 4. Corporate consumer goods giant Unilever plans to test a 4-day work week in New Zealand. Unilever brands include household names like Ben & Jerry's ice cream, Dove soap, and Lipton's tea. The company has 81 employees in the country, and they'll all be allowed to cut their work hours by 20%, but keep their full salaries for the year-long trial. The University of Technology Sydney in Australia will work with the company to track the staff's progress. And finally, 42. The price of Bitcoin surged 42% in November before hitting a new all-time high today as the popular cryptocurrency closes in on $20,000. Not only did the Bitcoin rally outperform the S&P 500, it also beat out gold, which actually lost value in November. Check out all of our Bitcoin and crypto coverage by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday, Thursday, and Friday, so be sure to catch us later this week.